Good morning, traders. I'm Dennis Dick.
And I'm Joel Elconin. Welcome to the new and expanded pre-market info show.
Yeah, we're doing a little bit differently here for our live listeners. Starting at 8:45, then at 9 o'clock, we'll go into a Q&A for our live listeners, and then obviously Joel will bring you into the open around 9:15 to 9:30. Our recorded listeners will still only get the news part of the broadcast, which we're going to get into right now. Joel, S&P futures trading up about 5.5 points here. A nice little rally overnight. This market just slow and steady wins the race. The continued climb.
Yeah, a couple good numbers to look at here in the futures. You did on the downside, even though we're 10 points away from there. Wednesdays and Thursdays lows matched each other right on the nose, 15, 70, 75. Friday we couldn't quite get there. 72.50 was the low, but just want to alert our traders, investors here. We are opening up into Friday's high, which was 1582.50. We did exceed that in the pre-market by 3 ticks, but as things stands right now, we should be opening into resistance.
We got Apple was having a nice day on Thursday, nice day on Friday, a couple days of steady climbing here. It's up another couple bucks in the pre-market here as well, trading at 419.81. So right around that 419 area, it's breaking through that old resistance. And actually, I like this chart, Joel, on Apple. It's coming back nicely. We kind of shook out everybody below 400, closing below there a few times here. Reported earnings, they obviously had the big after hours pop on the earnings, and then they sold off and the stock opened below 400, but it's been a steady climb really in the regular session ever since that earnings report. We did spike up on that earnings report to almost $430. I kind of feel like that's where the stock might be heading. What's your take here on Apple?
Well, you've also talked in the past about V-bottoms in the stock, and you did get the V-bottom.
Kind of, but you know what? I'm going to cut you off on that one because you did have that one bar down, though, where people like I always talk about the V-bottom with a chance that shorts don't get covered. But because of the earnings day and because we opened back below that 400 area, I think shorts did have a chance to cover on here. Although we have, But then it's been a steady climb since 400. So I guess it depends where you were shorting the stock. So
I see a V there.
Okay, you see a V. Okay, we'll give Joel.
It might be, but
it's an ugly-looking V.
Okay. I wasn't great in penmanship. We are back at that 419 area, 420 area, which held as support for a long time until we broke down ahead of earnings. Now we're peeking our head back above that. We've had a 420.68 high in the pre-market, so we'll just keep an eye on that. The actual high on the earnings day was 429.90. That's a good $10 away from here, but the way this thing is rallying now, it just seems like you have more short-term, medium-term traders, playing this, not necessarily for the huge, 20, 30-point moves, but more, the 5 and 10-point moves. So they're taking their target prices and taking them wherever it may lie, 421, 422, 423. So, I mean, it has the rally mode to it, but it certainly doesn't have, like, the breakaway rally mode when it made its run up to 705.
Yeah, I don't think you're going to see anything like that, but I think you are seeing a little bit of rotation into some of the laggards. We talked about this last week, and Apple obviously has been a laggard this year, so I think it is getting some of this capital. It's flowing out of some other stocks. It's like when they get nervous about the market now, they don't move it from equities to cash or to bonds. They're moving from equities to other equities. So being able to identify which stocks are the recipients of that cash obviously gives you an opportunity from a trading perspective. Like, let's take a look at Amazon here. Obviously, earnings there on Thursday night. Friday, the stock had a terrible day. This is a company that has put in so many tops up there in that whole 275 area. I mean, it's been a wicked resistance area for the stock. And then, obviously, had the wicked sell-off there on the earnings. Opened fairly high on Friday, but just sold straight off 20 points, closing near basically the low of the last couple of months here. This is a stock that's weak, and maybe Apple's a beneficiary of some of that capital that's coming out of Amazon. What's your take here on the Amazon?
Well, I don't know what made people change their minds from the pre-market into, I don't know if it was a conference call or whatever, but I guess you just have to keep out. You got Friday's low here at 452.81. Going back to March, you had a 452 low, and then a couple other lows in that area as well. So I don't think you need to worry yet until you break this 452 level.
252, yeah.
Taking a look, this area has just been monster support. So under this 252 area, there is some room on the downside. But hey, if you bought it the last 3, 4, 5, 6 times it came down to this level,
Worked.
you were rewarded. So, and this is looking at a weekly. So it's really been a champ here, holding 250.207, got to 258.81 on Friday. See if that level can hold up over the next couple days.
It's the 252 is the key level. I'm going to cite something that you often cite going the other way. When you're actually closed near the level, sometimes you just get a little bit of momentum going, and it can get that power to go through that level. Just like we've been talking about it on the bullish side so much because stocks have been moving up and breaking out through key resistance levels. Same thing can happen with support. We closed low at 254.81, closed fairly weak. You know how I love my 2-day moves, so I'm thinking the 252 might fall today, but you're right, support is support until it's broken, so I would wait till this thing starts ticking below 250, but I think if it goes below 250, I think the thing could see 240. Joel, let's go to JC Penney. What a morning, or what a day it had on Friday. It's having a continued pop here in the morning, obviously, with the Soros investment. JC Penney was getting a huge pop on Friday. It's continued here in the pre-market as they did get confirmation that they got the $1.75 billion loan from Goldman Sachs. Stock's up another 57 cents. Full disclosure, I do have calls on JC Penney. I bought out of the money weeklies on this on Friday, just playing at that, might be continued momentum to the upside here. What's your take on JC Pencils?
Just don't go in a store and not see anybody there,
No.
because
That's why I bought calls, not the stock.
you'll reverse it by puts. Just first note, I'm not sure if we could see this. This is from the activity on Friday when you initially got the Soros news. You did dip under 16, boy, but not for very long. We were hoping it was going to get like to the 1570 area to fill the gap, but that just very quickly you would have had to been on the move to catch that. Just going to the more recent activity, you have a 1777 high in the pre-market. You've backed off a little bit from them. Starting to get into a gap area here. This high was 1834. Before that, you had 1795. So you could start to run into some resistance here at the $18 area. And then I'm not sure what it's going to take to get it through this gap from 1834 up to 2026. But might take a little breather here at the $18 level.
Let's talk about another laggard, BlackBerry, BBRY. Some of the laggards have been getting pops, and BlackBerry is getting a pop here in the pre-market. Closed at 1502. It's trading up at 1555. Positive comments from Jefferies on their Q10 launch in the UK is probably the reason we're getting this 3.5% lift on 394,000 shares. Pretty big volume here for BlackBerry too. A little bit of continued momentum here from the last few days for BBRY.
Yep, got a good reference point though on the upside. We did hit 1562 in the pre-market. You're looking at the daily charts here. You had a high here at 1555 on March 28th. So you are opening up into some resistance. If you can clear that 1562 area, you have this dreadful day here where you don't have many reference points going all the way up to 1682. But Still gonna have to open up and crack the 1562, hold 1550, get a little momentum to get up in this thinly traded area.
And that's sometimes a great way to play the stocks too. Like we often talk about support and resistance, but with your numbers, even that you do every day on the S&P numbers, what I often do is I look for these gaps in the numbers. And when the stock starts getting into that gap, where there's not a lot of reference points, we know the stock can move through that area a little bit with more relative ease. Obviously, this is a big resistance area the stock's closing or opening into, so you need to get the stock quite a bit higher until it gets into that area. But start trading up 1575, 1580. Could easily blow through 16 and see 1620, 1630. So, that's just identifying different potential trading opportunities for you by using those numbers. Lots of different ways to use those. Let's look at a couple other ones here, Joel. Facebook, for one, that had a pretty decent day on Friday. Actually, a pretty wild day on Friday. It's trading up 31 cents here again today, 27.16. So Facebook, that whole 25 area has held pretty well there. That was the 50% retracement that you've talked about a few times. We keep bouncing out of there, and we bounced out of there 6-7 days ago, and continuing to bounce here a bit this morning.
Yeah, you've you got a string here of higher lows, and then you got the gap up here. You did have the rally early in the session here, kind of faded back a little bit. Do have a gap, 26.60 to 26.40. So if you're really trying to be patient on this thing, that would be the area of support you're looking for. But the boost that it's getting in the pre-market here, up 31 cents, doesn't look like it's going to give you an opportunity to do that today. You've had a few pops in the pre-market, 27.40. Looking at the dailies here, you hit 27.62 on Friday. A lot of times, though, when you have a sell-off like that, it's kind of a little bit slower to reach the previous day's high, 27.62, and then big resistance at the double top, the 28, even the 28.10 level.
Disney here getting an upgrade at UBS, and the stock is trading up about a buck here this morning, 62.74 in the pre-market, closed at 61.87. So this actually is approaching a 52-week high. 62.90, I believe, is the 52-week high there on Disney. Show the pre-market action, Joel, so people can get an idea of what's happening here early in the session. A couple sporadic trades, 6,400 shares only traded, but it is bid up at 62.55. So it looks like Disney is going to open up near that 52-week high.
Yeah, not a ton of volume associated with this. Too bad we weren't talking about this on Friday, because we would have talked about the triple bottom here. At this, yeah, it does. Yeah, quadruple bottom correctly. But if I was talking about it on Friday, it only would have had 3 in place. So that 61.55 level, 54, huge support on this. Not many reference points. 62.90 is the all-time high in this. 16 cents away from that in the pre-market. Not a lot of volume. Probably some paper kicking around at the $63 level. Break above 63, it's another breakout mode. But you're getting a house of mouse here, moving up towards the all-time high. Not in a ton of volume, and also with the S&Ps nearing some resistance too, you may want to be cautious on this on the long side off the open.
Gold's getting a lift here this morning again. Gold's had this quiet March GLD. It just continues to quietly climb. What a trend that's been. Higher highs, higher lows. It's now pretty much almost filled the whole gap area from that gap down on the one day. Obviously, when we dropped the 100 points, it's got almost 100 of the points, or over 100 points of that back on that move. So, but interesting enough, the miners really haven't followed suit. They've rallied a bit, but nothing like the GLD has. It's been an impressive rally for the GLD.
Who says technical analysis doesn't work, Dennis? Okay? Well, 143.43 was the low on April 12th, okay?
Yeah.
We gapped down. We traded all the way down to 130.51. You had gold bugs hiding under their bed, just freaking out. And then you come back up, and on Friday's rally, what number do you hit?
What is it?
143.43.
Right
on the nose.
Kisser.
Yep, so it filled the gap there, now pulling back a little bit. You have support at the 140 level. Keep an eye on that.
But we are back up there again this morning. Show the pre-market chart, 142.15. So we're going to make a run at that high there again maybe today. Pulled back a little bit from the highs, like you said, that we made earlier in the session. But we still are up $1.26 on the GLD here.
Right, and we also just mentioned that the miners are just kind of, they're making some moves here, but if you look at the percentage move in the GLD, boy, the miners are just kind of dragging along there. Newmont, take a look at chart on that, has kind of been a laggard. American Barracks has gotten a little pop out of there, but yesterday's close was still, a buck off its low of the move, so the miners a little bit slow to respond to the move in the physical.
I think the problem with the miners, and this is what we've talked about last week, is their cost of production has increased substantially over the course of the last few years. As gold has went higher, they go and dig in tougher areas. When gold's $1,500 an ounce, you can dig in areas like that. It's higher, and the cost of production on Barrick, the cost of production on Gold Corp, is approaching $1,000 an ounce. So if gold for whatever reason, at $1,400, these companies are still making pretty good money, but the concern is that if it dropped a little bit farther from here, some of the smaller miners too, their cost productions I think are even getting up into the $1,200 area. So that's where these companies are actually breaking even or possibly losing money. So they're probably still making money here with gold at 1,400 an ounce, but if it was to go back down to the levels I was just at, a lot of these companies could start to struggle. So I think that's the scary thing. At least with gold, gold is worth something. Problem is with miners, if they start to lose money, what can happen. So that's a scary thing, and that's why I think the miners have lagged a little bit. There's just nervousness. People would rather be in that precious metal itself as opposed to the miners and have, that risk of obviously they're bringing the cost production too high and the company's actually losing money. So that's been the overall problem there.
Okay, well, before we let you off here and get into the question and answer period, looking at the S&Ps, this is the 15-minute chart here. Looking at the dailies, we're gonna go up and get this 1588 and a quarter high today. I believe that was Wednesday's high.
Yeah, maybe. It's a slow. You got some resistance up there. We're getting into a resistance area. I mean, we had obviously, if we go back from 6-7 days ago, you got into the 1590, 95, or 93 area. Had the big sell-off where everybody's like, oh, maybe the bears are back in control here, and then obviously 6-7 sessions later, we're right back up here at the highs. I would expect some resistance in this area for the next couple of days. I don't think we're going to blow through it. But the 1600 is on the mind of the bulls for sure. They'd love to get it up there and get it to tick above there. So I don't think it's going to happen in the next couple of days. I think it's going to be a little bit of a battle here between the bulls and the bears. I think the bulls might eventually win it, but I see a little bit of quieter trading session. We're starting to get out earnings season. I think you're going to have a little bit quieter week this week.
Okay, that's our regular portion of the show today, folks, and we'll be back with you tomorrow.